Hey there, what's going on? Thank you for stopping by the channel and checking out this video, and welcome to WTF Mortgage. I am going to do a mortgage interest rate update for October 7th, 2024. And without introduction, let's just go ahead and jump right into it. All right. So mortgage rate pricing, as many of you might know, if you're clicking on a video like this, you probably are interested in this, and maybe you're a homeowner or looking to be a homeowner here shortly. So as you might know, interest rate pricing dropped down started dropping about 3 weeks ago. And when it first started dropping, we had some massive drops. Now it started creeping up slowly about a week and a half ago, really slowly, and then had some pretty good jumps. Pretty big jumps last week, like as I'm going to show you here shortly. Some of the pricing jumped up as much as $5,000 to $6,000. Now I'm going to always refer to this as pricing, because as I'm going to show you, and what I keep letting folks know, whoever I can get a hold of, let them know you're actually shopping for the fees, not the rates. And I know that might be counter to what many of you who have owned homes before, who have refinanced several times before, when you called around shopping for interest rate, you probably, there's a chance that you probably ask, what is your rate? What is your rate? And you're actually shopping for the fees. I'll show you this in a second here. As a matter of fact, let's just go ahead and pull up the chart. Okay, so this chart here, this is the full interest rate spectrum. This spectrum is available at every bank, every brokerage, every lender, every credit union across the country here. We all have access to these same rates. And when I say we, I mean me included. I actually own a mortgage brokerage. I've worked equal time for the banks, the lenders, and the brokerages in various positions over the past 26 years. And of course, I am still actively active in the industry. So that's why I say we. So we all have access to the same rates that you see right here. The big difference is what we charge in fees. Think of it like any other retail product. You go to two different stores that are selling the same thing. One has a better price than the other. You get the point here. This is no different. Us lenders and brokerages and banks, our products are these different types of loans and these interest rates. These are our products, and these products are going to cost different at the different companies. So anyway, let's go ahead and get into it here. So you don't see this full spectrum of rates. Of course, you will only see at each company that chooses to advertise rates, because most of the companies don't advertise rates because they want you to contact them, and then they'll let you know what the rates are. It's just a bit of salesmanship. They don't want you to just go on their website, see some rates, and then you run off to the next company. So many of them will not advertise the rates, or if they do advertise the rates, they won't show you the fees or the full fees associated with them, because they're not required to. We're not actually required to show interest rates. I do, but we're not actually required to show interest rates. And when you show the interest rates, the only thing that's required to show is the APR, because as I'll show those of you who have never ever seen any of my videos before, one of the things that the APR can do is let you know if there are fees associated with the advertised rate you're looking at. I'll show you that here in a minute. So again, we all have the same rates. We all have access to this full spectrum of rates here. You do not see this full spectrum of rates because as the pricing for these various rates go up, you're not going to see these advertised, because as you look here, you check out that, if you probably already saw the 4.25 interest rate there, $44,000 in fees. You are not going to see anything like that advertised. Same thing if you go down on the opposite end of the spectrum, the 7 5/8 or 7.65. I'll try to stick to referring to these in the decimal format. So the 7.65 here, that is no fees and a credit of $11,500. And oh, that's a little typo there. It's supposed to be 11,514. So you're not going to see that either, because that rate, people are going to look at that and say, hell no, that's too high. So you're going to see the rates advertised in what I call the Goldilocks zone. And that's that zone where the rates are low enough and the fees are low enough to attract homeowners and home shoppers there. And generally in that Goldilocks zone, they'll be advertising like the 1 point rate, or you used to see no cost rate a lot, but you don't see that much anymore. I actually have a no cost rate advertised right now. I prefer to advertise multiple rates. I've done that since I'd opened up my place about a year and a half ago. The only problem with that is just hard to switch the mindset of shoppers out there. They're just not accustomed to seeing multiple rates advertising, and they go on my site and they're like, what the hell is this? But it is actually the most freaking honest way to advertise. Unfortunately, trying to get folks to digest that is another story. So for the moment, I've went back to just advertising one rate, but I list the fees associated with that one rate. So what I'll typically list is the rate with no cost, and then let people get quotes on the other one as they like to. I want to eventually go back to advertising multiple rates. I like to advertise in each category. Like, for example, these are 30-year fixed rates. I like to advertise like 5 30-year fixed rates to make it easier for you to shop, because as I'm going to show you in the Goldilocks zone, these various companies are only going to advertise one of these rates. If you go on the different websites right now, you'll see they typically have one rate advertised, or one rate in each category. So like, hey, this is our jumbo rate, this is our conforming rate, this is our VA rate, or this is our FHA rate. They'll only show the one. So what that does is it makes one company look more competitive over the other company, and they know right now that people are out there are shopping for rates, unless they happen to stumble across my small ass, tiny ass YouTube channel and learn the proper way to shop for these, which is you're shopping for fees. But of course, 99.99999% of the people have not. So they're out there asking about rate. So it pulls people in, it drags them into the websites when one company is advertising this low rate. And what the customers don't know is that all the damn companies have that same rate. What they're really shopping for are the fees here. So that's why you won't see all these rates advertised. You'll just see one of these. Now, what I'm showing you here, this is actually real pricing, even though this is not to be construed as an advertisement. These are real rate pricing, real rates, real APRs from today, real fees, of course, something that you will almost never see there. But I want you to know what's going on here, what these things really cost. And this is actually discounted pricing. Most pricing that you're going to encounter is higher than this, but this will give you a great idea of what's out there and what you're looking at there. When you look on a website, you're going to see like 5.6 this week. You're going to see like 5.6 and 5.7 and 6.3 and etc. You're going to see these rates right here advertised. So I wanted to give you an idea of what you're looking at. So for those of you who have never, ever seen any of my videos, which is probably you watching this video, you probably have not seen any of my explanations on the APR. The APR gets butchered all the time. So let me give you the pro definition or the pro way to use the APR. So one of the ways to use the APR is to determine, I mentioned this a couple minutes ago, if there are fees associated with their interest rate being advertised. So when the rate and the APR are the same, that indicates there are no fees associated with the rate being advertised. So you'll typically see the note rate or advertised rate on the left, APR on the right. Sometimes the advertised rate is on top, APR is on the bottom, but most of the times you go on a website that does advertise interest rates. By the way, that's a little tip there. I mentioned this in a long shopping video. I did a shopping video, a free video. It's about 3 hours of material broken up into 19 different videos. It's on the channel there. You can check it out. I did that for free. I was writing a book a few years ago. Didn't finish it, decided to make the information for free. Check it out. I go over this stuff in detail on the videos. And but anyway, if the rate and APR are the same, that like on this 6.5 rate with the 6.5 APR, that indicates no fees associated with the advertised rate. And when the APR is higher than the advertised rate, that indicates fees. The higher the APR is above the advertised rate indicates more and more fees associated with that rate. Another way of looking at it, that is, the bigger the spread between the rate and APR indicates more and more fees associated with the rate. Check out the 5.5. Look at that spread there. It's a 5.5 rate with a 5.7 31 APR. That's considered a large spread, and that's reflected in the $11,903 in fees. When you go on down to the 6.125 that only has $926 in fees, that's reflected in the rate APR relationship. So we got a 6.125 rate and an APR of 6.143. So the APR and rate are very close to the same. That indicates a small amount of fees. So keep that in mind when you're shopping around, checking out rates. And then, as you can see, of course, on the 6.5, it is the same there. So that's the rate APR relationship. So when you're out there shopping or just checking them out, maybe you're not shopping, maybe you're just checking things out, you might be a year or 2 years away from even from purchasing something, or you might just be interested in not refinancing now, but just getting a price, staying apprised of what's going on. So this is what's going on. This is something that you don't see. Of course, what I'm doing is pulling a Wizard of Oz. I'm letting you see what's behind the curtain here. As the owner, I can show you these types of things here that you normally don't see. You can see the gamesmanship that goes on behind the scenes to draw prospective customers in. So what the hell is going to happen, and what do I suggest? All right, I do expect things to pop down again. I don't know if JP and the faux MCs, oh, sorry, that's Jerome Powell and the Federal Open Market Committee. I don't know if they're trying to give their big bank buddies another chance to make some more profits, or what. No, I'm just clowning. But I don't know what's going on with that. But anyway, the recent reports caused us to cause things to influence our pricing, which is why we all had to go up, like you see here. I mean, like literally the 5.5% rate that you see here, that freaking thing was, I was going to do this video on Friday, and I started doing it, didn't finish it. That 5.5 rate was $6,000 something in fees on Friday. And look, just that quick, freaking overnight, practically jumped up to $11,000 something. That 5.875 rate that you see there, that has 5,643 in fees. That damn thing a week ago, I had that at that was no fees and a credit going to you. By the way, credits, these are not lender credits or broker credits or rebates. This is, I just want to bring this up. This is something I have on the shopping video, but I want to bring this up now because if you're calling around places and you talk to them and there's a chance you could run across somebody using aggressive sales tactics, and they're going to tell you something like, oh, this is a lender credit we're giving you. It's not a damn lender credit. That's a credit for the interest rate that you are choosing. It's just like if you go out and you buy a car and say adaptive cruise control is included in the price of that car, but a slick salesperson comes along and tries to make you believe they're throwing that in for free or something like that. That's the best way to explain it. This is a credit for interest rate choosing. It's not a damn lender credit or some favor that these jackholes are doing for you. This is, you're choosing a higher rate to get that credit to offset closing costs partially or completely, because depending on what you are doing, a loan with a little cost or no cost or paying a point or a couple points is going to work out best for you. There is no one rate for everyone. It all depends on your situation. I'm not going to go into that in detail now. This is just an interest rate update, but just letting you know. So don't get fooled by that crap. Now, there are true credits, and that comes in the form of when you're negotiating. So like, say, for example, the 6.125 rate has a 926 in fees, and you want to get that for free. So you negotiate trying to get a lender credit to pay for that 926 in fees plus title and escrow, that type of thing. So that is actually a real lender credit that they're giving you. Or you can combine it like that. The 6.125 rate has a $118 credit. Well, let's say that's not enough to pay for some of the other miscellaneous fees, like reimburse you for the appraisal and escrow. Well, you can negotiate to get a lender credit, so you get a lender credit on top of the credit for the interest rate that you chose. So just wanted to bring that up there real quick. So what's going to happen now? What I recommended when rates pricing first started dropping down is going for a no cost or a low cost interest rate, exactly for freaking scenarios like this. Because if you do something when you're in a downward rate environment, it doesn't seem like it now because we went up again, but this is a downward interest rate pricing environment. If you did a no cost loan or very low cost loan now, you can do another one again in a few months. And you don't have to worry about breaking even on the closing costs that you paid for the last loan. So you can get, what do you call that? Get the bird in the bush, or the bird in the hand, the bird in the hand, and not sit there waiting for something else to come along. You can get that savings right now. In fact, if you had moved on a no cost loan like a couple weeks ago, and when now things have gone up, no guarantee they're going to go back down. We're expecting them to go back down, but no guarantee. So if things don't go back down, boom, you've already locked in. You're making a savings. There's a lot of you out there at 6.5% and 7% freaking rates, 7.25%, 7.375%, and going down from that to a 6%. That's a huge jump. I know you've probably seen that bullshit out there about you need to drop it 1% or more. That's a bunch of freaking BS. If you drop your price, if you have a $500,000 loan and you drop it down just a 0.5%, that's $200 a month in interest savings right off the bat that you're saving just with a 0.5% rate. So that's a bunch of crap that it's still around, one of those stupid ass urban legends, just like that crap about you can pay your mortgage off faster using a home equity line of credit BS. So no cost and low cost loans, that's what I recommend now. Choose the no cost. You can always do it again a few months later when and if pricing drops down. And if it doesn't drop down, well, you've got yourself something lower than what you had and you're saving interest. All right. So this is the my mortgage interest rate update for October 7th, 2024. I'm going to do another one of these because, I'm expecting to see some movement here in pricing over the next week and a half. So I'll do another one of these. So stay tuned if you want to see the real deal that's going on. So this is not like the kind of crap that you might see on TV, like you're watching, one of the people on the regular news and they say mortgage, the average mortgage interest rate is now dropped down below 7%. What they're quoting is the Freddie Mac primary market survey. I won't explain in detail because I explained it on other videos what that is, but you're not going to be able to use that to really shop. That's just to give some people a broad idea of kind of what's going on. It's a sample of the loans that went through Freddie Mac system. Anyway, I won't get into that. We'll get into that now, but that's what they're quoting on their Freddie Mac primary market survey, but they make it seem like there's some type of national 30-year mortgage rate. There is not. And then if you watch some of the financial channels, they get some bigwig on there with a long job title or something, the Western, Eastern, Southern, president, vice president, assistant president of whatever, some long ass job title. And then they give some kind of stupid ass advice like, well, mortgage rates should drop down sometime in the next 5 years. That kind of says, or if you go online and you type something about mortgage rates, best mortgage rates, you're going to get like 1.5 pages of Yahoos with these fake reviews. They're rating these mortgage companies. You'll see top 10, top 8, top 20, top mortgage companies. Those are all paid advertisements. I'm not going to call any of them out. I want to mention some of those names, but if you just Google it, you'll see those, all of those, every single one of those, they're paid advertisements. And so that, you got thousands of mortgage entities out there, thousands of places, literally thousands where you can get a home loan, and you'll see the same 10 to 15 places because those are the ones that are advertising on all these sites. Top 10. It's a bunch of horse shit because the people doing these ratings freaking don't even know anything. They know, I don't know. They know about as much as about home loans as I know about heart surgery. And then they put these bullshit ads up there online, and it's not funny actually because when people see something like that, now I think of it, I shouldn't be laughing at that because there are people that take that seriously. They think because it's this well-known source that this is the person putting this information out, it's reputable information, and oh yeah, these are good lenders, but it's actually a bunch of advertising horseshit. Nothing wrong with the advertising as long as there's truth in advertising. So I don't know, for the moment, I seem to be the only one putting some real information out there about these rates. So if you want to get some real information, tune back in. I'll give you some real stuff so you don't have to deal with the bullshit. All right. So take it easy, and I will see you on the next one.